G'day, g'day. It's a beautiful Friday, the 3rd of March. I'm Stefan Angelini, here for another economic wrap. Before I get into it, guess what? It's my wife's birthday tomorrow. So, Whitney, you beautiful woman, happy birthday. You get the joys of putting up with all my shit. So, hopefully, you have a great day and enjoy the present I haven't got you yet. Anyway, what we're going to talk about today is Australia's GDP and what's been happening in that world. We're going to talk about interest rate hikes and just how quick the pace of interest rate hikes has been compared to the past. Mortgage applications, we'll talk about how there's been a decrease in mortgage applications, commercial property issues, and how there's been a bit of a run on one of the world's largest commercial property funds. We're going to talk about how a lot of people are swinging into private credit as opposed to owning real estate. They're willing to lend to real estate, and the whole China recovery and just how quickly that is playing out. Now, for all you people that want to listen to the entire episode and watch me go into depth, head on over to the podcast or the YouTube channel. It's also on Spotify. It's Real Wealth with Stefan Angelini. If you're hanging on, guess what? Here's a little disclaimer. This is just general information. Please don't consider it as personal advice. And if you want personal advice, well, go and speak to a licensed financial planner. But guess what? At Angel Advisor, we are licensed financial planners. So if you need some help, reach out to hello@angeladvisory.com.au. Now let's get into it. So what are we talking about today? Australia's GDP. So GDP has rose again by 0.5% in the December quarter. So that's October, November, December, which is pretty good given the backdrop of what's been happening around the world. In actual fact, we grew by 2.7% for the whole year through to December. So what that would mean is that the Reserve Bank increasing rates or the monetary policy tightening is not working just yet because they're meant to be slowing demand. So what the main thing's causing it is there's been an increase in consumption, basically retail, hospitality. People are still buying a lot of things, so they haven't felt the impact of increasing rates. So we'll see what happens. That the RBA will take that and say, well, we should keep increasing rates to slow down GDP, to slow down spending. So we'll just see what happens there. It's such a moving part. In terms of interest rates and what's been happening around the world, so in 2022 to 23, it's been the fastest tightening cycle ever of interest rates. So we've gone up 450 basis points in about 10 months. So that's over 12 months from 0.25% to 4.75%. So this is in the US. So I'll keep going on the US because Australia has followed suit pretty much. The next closest, fastest tightening was in 1983 and 1994, but they stopped after 300 basis points. So the US has gone up 4.5%, which is huge, and so quickly. So they're really trying to clamp down because they see the inflationary side issues, and that's had a ripple effect through to Australia as well. So that's what we're doing with our RBA cycle. We have as well faced the fastest tightening here in Australia. So it just goes to show just how much of a different time it is compared to the rest of the world, where the rest of history, when economists have actually seen banks and on GDP increasing and the economy going too fast and have been able to put the brakes on slightly. Whereas right now, what Reserve Banks are trying to do is put that foot on the brake to just slow everything right down. Let's talk about mortgage applications, because the housing sector is a huge part of our conversations. In the US, this is something from CNN Business. Mortgage applications were down 5.7% for the week ending February 24. Now, the purchase of new homes, applications for the purchase of new homes were down 44% from a year ago, and applications for refinance down 70%. So I'm guessing you're going to see similar figures here in Australia. Talking to a mortgage broker yesterday, it's quite the same. People aren't buying properties, but also people aren't refinancing because we're seeing a lot of banks are willing to hold on to their customers. So if you are a bank client and you see that your rate is out of control, go back, talk to the bank, see if they'll refinance you, or go speak to a broker because there's some good deals out there. In terms of commercial real estate, this has obviously been a lovely sector over the last few years. And in fact, there's a specific fund called the Blackstone Real Estate Investment Trust, or they call it Real Estate Income Trust, where throughout 2022, when markets were down 26%, the fund had actually gone up by 8.4%. So it shows that commercial real estate works in opposite to the way equities work, which is great for some investors. But for this particular fund, they've got a $71 billion trust. Now, they've had about $5 billion or $3.9 billion in withdrawal requests in February alone. And that was after, I think, another $5 billion in withdrawal requests in January, which they paid out. So they're now only paying out partial withdrawal requests because If they pay out more than that, they have to start selling real estate, which I don't want in the current environment. So it just goes to show that things like this are going to start happening in Australia. But what we're seeing is that people are more willing to lend to the market than to actually own the market. So the commercial real estate part has done its job. It's held up quite well, but now people are swinging into private credit. So explain what private credit is. It's lending to either things that are backed by real estate, so real estate trusts or just your general property. You can lend to businesses, so that's called a corporate loan, or you can lend to asset-backed lending, which is backed by cars or any kind of assets. In Australia, we have grown from a $135 billion market to a $250 billion market in this space between 2017 and 2022. So it's big, but it's not as big as it is in the US. So it's still only about 2.7% share. In the US, it's gone from a 30% share in 1994 to 81% in 2022. So the private credit market is huge in the US and it's starting to grow here in Australia. And that's where people are willing to hold their money rather than actually hold the real estate at the moment, is what we're seeing. In terms of China, China has grown super fast. And even their leaders are sort of surprised by the pace of the growth. So let me read something here. So they did go into lockdown following COVID, and they've been in lockdown for quite some time. The outbreak was expected to last. So what happened was when they released everyone out into the public again, everyone started getting COVID. So once they started getting COVID, they knew the infection was going to last through the economy and last through the population for quite some time. They thought it was going to go until February, March. Now they're saying that everyone's already had it. It all ended in January. So now people are starting to recover, starting to go out, being more confident about going out and actually spending more money. So the Chinese government has increased their expectation for GDP from 5% to 5.5%, noting that in Australia, we're expecting maybe a positive GDP for the year 2023 if we can. But look, that's the fastest pace. That's the slowest it's grown since 1970. So still issues for China. They do try to target an 8 to 10% GDP growth each year. But there's obviously just a few things holding that up, COVID being one of them. Now, the Chinese government are most likely going to release monetary and fiscal policies to ramp up their economy, like we saw here in Australia. So basically, Chinese people have been in lockdown for about 3 years, got heaps of pent-up savings, but they need to get people working again and they need to get economies moving again. So if GDP stays slow at around about 5% for China, then you'll see a whole flurry of monetary and fiscal policy, which we like to see because that makes markets run. Anyway, that's a great little update from me. Again, to my wife, Whitney, happy birthday. Have a great day. Everyone out there, thank you for listening. Have a great weekend. We'll see you next week. Thanks a lot. Bye.